Welcome traders. Today I'm going to show you what I trade in the forex market. So when you look at this chart, what do you see? You see candlesticks formed and you see various market movements, right? If someone who is new to trading look at this chart, what would that someone see in this chart? Let's see. First, we start moving randomly here and there at this point. Then what happens is we break these random movements and move all the way to the upside. Right. Then what happens? Then we start retracing down. Then at this point, new traders would probably think that this movement would happen until this structure level. You see, there is a previous major structure level there, point. And what happens is it doesn't come all the way down to this point. Instead, it ends up being middle of nowhere, right? There is no structure in the market at this point, right? Then we retrace back, then we push back up, and up, and we don't go near this structure level, and we stop right here. And then what happens is we start to push down again. Then new traders here would again think that it would stop at this previous stop, and what they would do is they would probably buy the market at this structure level, right? Then what would happen? It moves up a bit and then they would be stopped out. Then after a while they see this, the market is breaking and closing below this structure level, and what do they think at this point? And market pushes right back up into this structure level. Then they think that they are in a downtrend, so that they sell the market at this point. And what happens is market will move just a bit down and go back up and hit the stop loss of the trade. So what is this? This is a total chaos. At this point, traders will probably quit trading or blame everyone they can in order to feel better. But if someone is learning to trade properly and come into the market, they see a clear picture of the market at this point. This whole picture. Alright, let's see. If an experienced guy is coming to trade, what do they see? They see this impulsive movement to the upside from here to here. Then it moves down and stop at this point. Then it moves back up and push back down. That looks like something. Yes, it is definitely something. Let me get my Fibonacci retracement tool and let me draw a Fibonacci retracement from this point to this point. Now, now we see the things much more clearly. We push back up and we come to this 0.5 retracement level and we again push up and we don't touch this particular structure level and we start to push down and we come right into this 886 retracement level. Guys, this is what creates a classic Gartley 222 pattern. What? A Gartley pattern? What the heck that means? You probably would be thinking that, right? Let me tell you what. If a Gartley pattern is formed in the market, it means that after the pattern, market tends to go in the direction of the first impulsive leg. You see, first impulsive leg is bullish, so market goes in the bullish direction from this point on. Is that what happened? Yes, that is exactly what happened, right? Then I'm not going to discuss about the profit targets here, but we are probably, yes, we definitely been filled or in of the targets of this pattern, right? Yeah, it's about nearly just 250 pips. 250 pips in a single trade. Is that bad? No, it's not bad, and it's definitely very, very good trade, right? Alright, traders, that's what I'm trading in Forex. I mostly trade advanced patterns. So if you are interested in trading advanced patterns, stick with this channel and subscribe to our channel and like, comment, and share the video for me. And I'll see you with another video.